LiveStream. WeMasterTrade.
Welcome back with WeMasterTrade family, it's Megan here and I'm beyond excited to be with you today for another incredible live session. Whether you've been with us for a while or this is your first time joining, buckle up because we've got a jam-packed session full of insight strategies and the kind of tips that will take the trading game to a whole new level. So who's ready to crush it today? So we've got traders tuning in from all over the world and it's awesome to see that everybody coming together to share, learn and grow. So let's keep that momentum going because today's session is going to be next level and we've got some special guests here who are here to share their stories and strategies that will help them fly to the top of their game. So trust me, you don't want to miss a single word. So first up, I have the honours of introducing Helen, an absolute beast in the Forex market. Helen's been mastering Forex trading for over 2 years and a half and he's here to share some shares the valuable insight with all of you. So Helen, how's it going?
Hi Aiden, I'm feeling fantastic and thrilled to be here. It's always wonderful to engage with the WeMasterTrade community and discuss the successful approach I recently adopted. I'm eager to delve into some of the strategies I've been applying in the Forex market.
So love that energy, Helen, and I know the audience is bummed to hear all about your Forex journey. But before we get into that, let's not forget about next guy, Scholar. So Scholar's been dominating the fund trading scenes, especially in the high stakes world of crypto and stock. So Scholar, how's it going?
Hi Aiden, I'm excited, equally excited to be here. These sessions always offer a fresh topic for discussion, and today I'm here to share some of the strategies that have been effective for me in fund trading. It's going to be an engaging session.
So that's what we'd love to hear. So for everyone watching, make sure you've got your notepad ready because Helen and Scholar are about to drop some seriously valuable knowledge bombs. Be diving deep into their experiences, challenges, and the strategies that help them in the fast-paced world of fund trading. So Helen, let's kick things over you. You've been trading Forex for over 2 years and a half now, and I know that the audience can be a bit of a roller coaster. So can you tell us how you got your start in Forex trading and what led you to choose WeMasterTrade as your platform?
Certainly, Aiden. I began Forex trading about 2 years ago. What captivated me initially was the market vibrancy and curvature activity. The foreign market is exceptionally dynamic, and I was attracted to the concept that there is always potential for success regardless of the circumstances. When I first discovered WeMasterTrade, it immediately resonated with me at the perfect match. The results they provide include a sophisticated technical analysis and access to the real-time data truly impressed me. However, it's where the community aspect that clinches for me. WeMasterTrade play a strong emphasis on aiding traders' success by offering essential tools and support to advance regardless of your starting point.
That's fantastic, Helen. It sounds like WeMasterTrade has really helped you validate your game. So now Forex is known for its volatility, and sometimes it can make or break a trader. So how do you handle the ups and downs of the Forex market without letting the pressures get to you?
A great question. Volatility can be challenging, but it's also where the real opportunities are. The key is having a solid risk management plan. I always say you have to respect the risk. It's important to stay disciplined, and WeMasterTrade risk management tool help me to do that. Their real-time alerts and customizable risk parameter allow me to react quickly but with control. When the market moves fast, you have to stay calm, trust your strategy, and not let emotion take over. And for me, that's where WeMasterTrade feature really shine.
So that is some seriously valuable insights, Alan. Managing risks and staying cool under pressures is definitely key in Forex trading. Now, Scarlett, let's switch gears to fund trading. So you've been crushing it for nearly 2 years, so specializing in long-term strategies. But can you tell us what drew you to fund trading and how it differs from other forms of trading?
Absolutely, Aidan. Fund trading revolves around strategic, long-term growth. It's not about seeking quick wins, but constructing a portfolio that can steadily advance over time. What truly distinguishes fund trading is the need to consider both short-term and long-term perspective. Careful risk management is crucial while simultaneously keeping an eye out for emerging opportunities. WeMasterTrade real data and analysis tools has been instrumental in achieving this balance. They enable me to make well-informed decisions that align with my long-term strategy, even when the market presents unexpected challenges.
So I love that fund trading definitely seems that it requires a lot of patience and foresight. So Scarlett, how do you stay focused on the bigger pictures, especially when the market gets rocky?
While patience is paramount in fund trading, the market experiences fluctuations, but short-term ups and downs shouldn't dictate your long-term strategy. A crucial lesson I've learned is to maintain emotional detachment. Means don't get overly excited when things are going well, and don't panic when the market dips. WeMasterTrade risk management tools assist me to staying disciplined even during volatility. I can set precise risk parameters and have peace of mind knowing that I'm not overexposed even when the market behaves unpredictably.
So that's such solid advice. Keeping your emotions in check is definitely a big part of being successful in trading. So you both have shared some serious gems so far, but let's talk about the tools that will help you to get to where you are today. So, Helen, can you share one specific features in WeMasterTrade that's been a game changer for you in Forex?
Alright, Aiden. A tool I absolutely rely on is the account insight feature. It offers up to the minute data on how my account is performing, and I use it to observe patterns, evaluate my trades, and make a better informed choices. Whether I'm pinpointing the best time to enter the market or the deciphering market trend, this tool gives me an edge. It has enabled me to spot opportunities that might not have been noticed otherwise.
So that sounds like a total game changer. Having the real-time insights is crucial, especially when you need to make quick decisions. So Scarlett, what about you? What's been your go-to tool in fund trading?
Well, for me, it's all about the risk management tools. They allow me to customize the amount of risk I'm willing to take on any trade. This has been key for me, especially in volatile markets like crypto. WeMasterTrade helps me stay disciplined and in control, ensuring that I never take on more risk than I'm comfortable with. That's what's kept me grounded and when the market is going wild.
So risk management is so important, especially in today's fast-moving market. So whether you're in Forex or fund trading, having the right tools makes a world of difference. So I hope that everybody's taking notes because Helen and Scarlett are dropping some serious pro-level insight today. Alright traders, so we are going to kick things up a notch because it's time to dive into one of the most powerful features here at WeMasterTrade, the packet comparison. So whether you're a fresh paid newbie eager to get your feet wet or a seasoned pro looking to scale your game to new heights, this segment is for you because this is where you find the perfect trading package to match your goals and take your trading to good to great. So let's be clear, here at WeMasterTrade we all know there's no one-size-fits-all in trading, so every trade is unique with different style, risk tolerance and strategies, but that's where we offer multiple customizable packages to meet you exactly where you are in your trading journey. So whether you're aiming for high risk and high rewards or you prefer this steady methodical approach, there's something here for you. And to break it all down, I've got the awesome Helen and Scarlett, two of WeMasterTrade's finest, so they both work closely with these packages and are here to give us the inside scoop on how to leverage each one to its full potential. So, Aurelia, Jim and Helen, you've been with WeMasterTrade for a while now, and you've seen firsthand how these packages can evaluate a trading experience. So, can you kick things up by walking us through how both new and experienced traders can benefit from the packet comparisons, and why is it such a game-changing feature in the WeMasterTrade experience?
Absolutely, Aiden. I really enjoy discussing these packages because it's where the trader can truly customize their experience. The packet comparison feature simplifies the process for the trader to understand precisely what they are getting. When you visit the website, there's a detailed comparative overview of each packet that includes information like the initial balance, the profit target, daily loss limits, and more. All of essential details are presented in a straightforward, easy to navigate table. It's all structured to assist traders in selecting the best tool for their success. Okay, let's talk about the standard packets, one of the most popular options. This one is great for the trader who got some experience and are ready to level up. You start with an initial balance up to the $200,000, which gives you plenty of room to trade confidently and make a strategic move. The profit target is set at 6%, which is a profile for the traders aiming for steady, sustainable growth, and the daily loss cap is 4%. So you got enough breathing room to ride down market swing without stretching too much. It's an awesome balance between opportunity and security.
So that sounds like a perfect stepping stone for traders looking to level up without jumping in too deep or too quickly. A 200,000K balance at a solid 6% profit target gives you a ton of flexibility to build momentum. But for those who are looking for something a bit more feeling, so let's talk about the 5-10-10 package. So Helen, I hear that this one's a favorite for high risk, high reward traders. So what makes the 5-10-10 such a standout?
Okay, the 5-10-10 package, now we are talking the big play. Like the standard package, you start with $200,000, but this package is for those traders who are ready to take on a bigger risk for bigger regard. The latest loss cap is 5%, giving you more flexibility in how you handle the market. But here the kicker, the profit target jumps to 10%. This is perfect for traders who have confidence in their strategies and are looking to make those major gains. It's all about having a higher tolerance for risk in a trend for the bigger payout.
So now that you're talking about a 5% loss cap at a 10% profit target, but that's definitely for traders who aren't afraid to go big and swing for the fences. But what if someone's looking for something that is more relaxed? Maybe doing something simpler without all the pressures of hitting specific profit targets. So Scarlett, I've heard about the 5-10-0 package, so can you break it down for us?
Well, absolutely, the 5-10-0 package is ideal for traders who want a straightforward, no nonsense approach. You start with a $100,000 balance, but here's the cool part. There's no profit target. You can trade freely without a straight up hitting specific percentages. It's just you, the market, and your strategies. The daily loss cap stay at 5%, give you some structure, but the beauty here is that it allows traders to focus on consistency without worrying about specific goals.
So that sounds like a dream for traders who just want to try without all the restrictions. Total freedom, no pressure, just you in the market. So Scarlett, what about those traders who want a bit more control over the risk management but still want to play in that high-stake arena? So what can you tell us about the 5-10-10 no PC package?
Well, the 5-10-10 no PC package is perfect for traders who want more control over their trades. You still get a $200,000 starting balance and a 5% daily loss cap. But the flexibility is the real selling point here. This package allows you to tweak and adjust your trading parameters to match your style and risk management preferences. Whether you're reacting to market changes or want to experiment with different strategies, this package gives you the freedom to adapt without losing the safety net of risk management.
So flexibility and control in a volatile market, that's huge. I love how these packages are giving traders more ways to adapt and grow. Now that we've covered a lot, but been hearing whisper about something really special, the custom package. So Helen, tell us, what makes this one so exciting?
Okay, the custom package is where the thing gets really exciting. This is for the trader who want it all, full control, full customization, and a massive starting balance. You got a charge wrapping for $400,000 initial balance. Yes, it's 400,000, but that's just the beginning. The real beauty is that you can customize everything. The daily loss limit, overall loss limit, and even your profit target. It's for traders who know exactly what they're doing and want to grab a trading experience that matches their exact needs. It's intimate in freedom and control.
So 400,000 starting balance and the ability to customize your entire trading experience, that's next level trading. So whether you're a risk taker or a methodical trader, the custom package sounds like the ultimate playground for those who want to take the trading to this stratosphere. To overhead traders that quickly work out whether just starting with the standard package or going for bigger rewards with the 5-10-10 new PC or customizing everything with the custom package, I believe the WeMasterTrade has the perfect options for you. So the only question is, which one is calling your name? So head over to the back comparison sections on our website right now and check it out for yourself. So we've got packages designed to fit every trader no matter where you are in your trading journey. Let us know in the chat which package speak to you, and our team is ready to get you started. So the futures of trading is in your hands, so let's make it happen. So, over here, this is what is going to happen. So we'll talk about the packages and how you can jumpstart your trading journey with WeMasterTrade. But let's be real, so trading isn't just about the package that you choose. It's also about understanding and sticking to the rules. So the conditions that we'll set to you at WeMasterTrade are designed to not only keep you safe, but also keep you grow and help you take the strategies to the next level. So now, whether you're just getting started or you've been trading for years, these conditions will act as your roadmap. So let's dive into the rules that define our trading environment, because if you understand the rules, you can master the game. So first on the list, and arguably one of the most important, is a daily loss limit. So Scarlett, you've been through it all, the high, the low. So can you kick us up by walking us through how this daily loss limit works and why it's so crucial for managing risk?
Absolutely, Aiden. The daily loss limit is one of the most essential protections any trader can employ. It serves as a daily circuit breaker to prevent you from suffering significant losses on a challenging day. Well, the concept is straightforward. There is no limit to how much you can lose in a single day of trading, and it's determined by the greater of two values, your account balance or your equity at the beginning of the day. And let me break that down with an example so everyone understands this clearly. Well, with the example number one, let's say you got a balance of $105,000, but due to some open trades, your equity, including floating profit and loss, is $107,000 at the start of the day. If you're working with a 4% loss limit, that means you can lose up to $4,000. If your equity falls below $103,000, you're done trading for the day. And with the second example, on the flip side, if your balance is $100,000 and your equity is $99,000, the same 4% loss limit would mean your account will be liquidated if your equity dips below $96,000. The point is the daily loss limit is there to make sure a bad day doesn't wipe you out completely. It's about protecting your account and giving you the chance to regroup and come back stronger the next day.
So it's like an insurance policy for your trading day. You hit that limit and boom, you're out before things get out of hand. But what happens if the trader accidentally crosses that eye? Can they keep trading?
Great question, Aiden. No, if you break the daily loss limit, your account is automatically liquidated. All your open position will be closed and you weren't able to trade again until the next day, or unless you buy a new trading package. Here's the thing, this liquidation is automatic and immediate. It's designed that way to prevent further losses. But here a word of caution. Market fluctuations can sometimes cause you to lose a bit more than the limit, depending on how fast the market is moving.
So it's a hot start, definitely something traders should keep an eye on here. And now that we understand what the daily loss limit is and what happens when it hits, the next question is how to avoid hitting the limit in the first place. So Scarlett, you've been trading, in the trading changes for years. Can you tell us some practical strategies that traders can use to stay within the daily loss limit? We're all ears.
Well, you got it, Aiden. Staying within the daily loss limit is all about being disciplined and following a solid risk management plan. Here are a few key strategies that have worked wonders for me and countless other traders. First, and I can't stress this enough, always use a stop loss. I know it sounds simple, but it's absolutely critical. The stop loss ensures that if the market moves against you, you're out of the trade before things get out of hand. Think of it as your safety net.
So that's why setting up guardrails in a mountain road, right? It's as a stop you before you're off the cliff.
Exactly, either it is that extra layer of protection. Now the second strategy is position sizing. This is where a lot of traders slip up. You should never risk too much on a single trade. A good rule of thumb is to risk no more than 1 to 2% of your account balance per trade. This way, even if the trade doesn't go your way, you're still far from hitting your daily loss limit, and you can keep trading without any major setbacks.
So it's like building your defense, you don't put everything in one play, right? You spread out the risks, makes sense. But what about those minimum traders who feel tempted to chase after the losses, trying to get it all back in one trade?
Oh, that's a big one. Chasing losses is one of the biggest mistakes traders make, especially newer ones. This brings me to my third strategy: don't chase losses. If you're having a tough day, take a step back. The market will always be there tomorrow. If you start chasing losses, trying to recover too quickly, it's easy to make emotional decisions that lead to even bigger losses. And before you know it, you hit that daily loss limit and you're out for the day.
So true, it's like trying to sprint where you're ready when dead. You're more likely to make a mistake. Now, Scholar, these strategies sound spot on, but how do traders stay mentally strong when things aren't going their way? What keeps them from falling into that emotional trap of chasing losses?
Well, it's all about mindset. Trading is just as much a mental game as it is a number game. You got to stay calm and focused. One trick is to always have a trading plan before you even place a trade. That way, when things get tough, you stick to the plan and avoid making impulsive moves. And if you find yourself getting emotional, just stop, take a break, and step away from the screen and reset your mindset.
So thank you, Scholar, for those incredible tips on managing daily loss. Now let's shift our focus to another critical element of risk management, the maximum loss limit. So this limit is like your long-term safety net, ensuring that you don't deplete your account over time. So unlike the daily loss limit, which resets at the end of each day, the maximum loss limit is cumulative. So when you reach it, your account will be locked and your trades will be closed. So to dive deeper into this, let's discuss how the maximum loss limit works, how it is calculated, and why it's essential for traders at every level. So whether you're a new trader looking to minimize risk or an experienced trader scaling your strategy, this limit ensures that you don't go beyond the points of no return. So Scholar, I know that you've got some great insights into the mechanics of the maximum loss limit. So could you walk us through how this rule works and what traders need to keep in mind as they plan their trading strategies?
Across agent, the maximum loss limit is a vital rule that often overlooked but extremely important. Essentially, it's there to prevent traders from experiencing catastrophic losses by capping how much you can lose across the life of your trading account. So let's break it down. The maximum loss limit ensures your account equity never falls below 94% of its initial balance. So if you start with a balance of $30,000, $50,000, your account will be closed when your equity falls to $47,000. That's a total allowable loss of $3,000. However, it is not all bad news. If you start making profit, the limit adapts, giving you more breathing room as your equity grows. For example, if your account balance increased to $52,000, you now make $2,000 in profit. Your new maximum loss limit would then allow you to lose up to $5,000 as you're essentially locking in those gains. The maximum loss limit acts as a long-term safeguard. Is designed not only to protect your account but also to encourage disciplined trading by setting boundaries. The goal is to ensure you don't dig yourself into a hole that's too deep to recover from. So here are a few specific examples. Case number one, let's say your account balance starts at $50,000, but your equity drops to $49,000 due to some market losses. You are allowed to lose another $2,000 before your account hits that critical $47,000 threshold and is automatically closed. With the second case, now if you're doing well and your equity rises to $51,000, you got some extra cushion. At this point, you're allowed to lose up to $4,000 before your account hits that same $47,000 limit. Well, To figure out where you stand, the maximum loss limit is calculated by adding the sum of your closed position and factoring in any open position that are still running. Your trading dashboard will show two key metrics. The first is max permitted loss, which means how much you're allowed to lose overall, and the remaining loss, which means the loss left before the account is closed. Now, what happens if you hit that limit? Well, unfortunately, if your equity hits that maximum loss limit, the system will automatically close your account for the day, or your open position will be liquidated, whether you are profitable or not, and you'll be unable to trade for the rest of the day. Well, and to resume trading, you will need to purchase a new trading package.
So thanks, Scholar. That's definitely helped clarify the nuts and bolts of the maximum loss limit. So next up, we're going to enter a short break, and after we're going to continue to explore how to avoid hitting the maximum loss limit and the also promotional plans that we are currently running.
Copy Trade.
Welcome back, everybody. So this is going to be, let's perfectly into our next key topic, the profit consistency rule. So this rule is critical for ensuring long-term sustainable success in trading, as it helps measure and maintain consistency in your profit. So now to give us a clear pictures of how the profit consistency rule works and why it's important. So let's turn to Helen. So Helen, could you break down the rule for us, how it is calculated and why is it so important for these traders to focus on their consistency rather than just aiming for big wins?
Of course, Aiden, profit consistency rule is a powerful metric that helps you understand how stable your profits are over time. It's not just about making a big gains on one or two good days. It's about being consistent day in and day out. So here's how the profit consistency rule is calculated. You take your highest single day profit and divide it by the total of all your profit and losses over given a period, usually a month or a quarter. You then extract that result as a percentage. Let's go through an example. Say your bad day brought in the $200 in profit, but over the month, your total profit and losses add up to the $410. In that case, your profit consistency ratio could be about 48.7%. This ratio shows how much your performance comes from one standout day. Ideally, you want this percentage to be lower under to 20%. Because that means your profits are more evenly spread out across all your trading days. Now, and why it is important? A low profit consistency ratio indicates that you're not just rely on a couple of big wins to stay profitable. Instead, you're showing that your strategy works consistently over time, even on those days when the market isn't giving you a big win. That kind of consistency is the hallmark of a successful long-term trader.
So that's a great explanation, Helen. So just to clarify, a lower ratio means that you're more likely to make steady gains rather than being overly dependent on the good days, right?
Exactly, Aiden. When you rely on just a few big wins, it often means that your strategy is risky or inconsistent. You could go through long stretches where you're not making much money or even losing it. But if your profit consistency ratio is low, it shows that your performance is smoother and that your trading is more predictable and stable over time.
So that's incredibly insightful, and it seems like a critical metric for any trader to use here. It's about long-term success, right?
Exactly. Consistency is the key to sustainable profitability. Big wins are great, but if they follow big losses or long periods of break-even trading, it's hard to maintain momentum. With the profit consistency rule, traders can keep an eye on how reliable their strategy is over time.
So now that we've got a solid understanding of what the profit consistency rule is, so let's dig into some practical strategies to help traders maintain a low ratio easily under 20%. So Scholar, I know that you've got some great tips for us. So can you walk us through some techniques that traders can use to stay consistent and ensure that their ratio stays in check?
Absolutely, Aiden. The profit consistency ratio is a powerful indicator, but it takes careful management to keep it low. So let's talk about some practical ways traders can improve their consistency and avoid becoming too dependent on those rare big wins. So one of the most effective strategies to keep your profit consistency ratio low is to diversify your trades. This means spreading your investments across different markets, asset classes, or even trading strategies. If you only trade one market, say forex or stock, you risk being too reliant on that market's performance. By diversifying, you reduce the impact of any single loss and create more stability in your overall performance.
So that makes a lot of sense. If I'm only trading in, let's say, the US stock market, I bet we could really hit make profit consistency hard. But by adding trades in, for example, commodities or forex, I could balance some of that risk, right?
Exactly, and it is all about balance. When one market isn't performing well, another market might be doing better. This way, your overall performance stays smoother and you're not relying on just one or two trades to pull you through. Next up is position sizing. One of the biggest mistakes traders make is over leveraging, taking on positions that are too large relative to their account balance. For example, if you have a $10,000 account, putting $5,000 into a single trade is risky because if that trade goes south, you could lose a significant portion of your capital. Instead, aim to keep your position size small and manageable. Say no more than 1 to 2% of your account balance per trade. This reduces your risk and helps ensure that losses don't overwhelm your profits.
Right, so it's not just about picking the right trades, but also making sure that you're not putting too much of your capital risk on a single trade. So smaller, more controlled trades lead to steadier results over time, right?
Exactly, by managing position sizing, you prevent any single trade from having too much impact on your overall performance. It's all about control and discipline. Another crucial element is having a well-defined trading plan. Without a plan, it's easy to get caught up in the emotions of trading, whether that is the excitement of a potential win or the panic of a sudden loss. A solid plan outlines exactly where you enter and when you exit, and how much risk you're willing to take. Having these rules in place keeps you grounded and helps ensure that your trading decisions are consistent, which in turn helps keep your profit consistency ratio in check.
So that's a really good point. A lot of traders, especially new ones, probably jump into trades without a solid plan and end up making an emotional decision, right?
Absolutely, and it is all so easy to get emotional in the heat of the moment. But if you have a plan, it's much easier to stay disciplined and avoid impulsive trade that could hurt your performance. So this brings us to stop loss orders. A stop loss is an automatic exit that you set up to close a trade if it moves against you. This helps to cap your losses on any single trade and protect your account balance. By using stop loss orders, you can avoid those catastrophic losses that can throw off your profit consistency.
So I like the idea of using stop loss orders. It sounds like a way great to take the emotion out of the decision-making process.
Exactly, it's like setting up a safety net. Once your stop loss is in place, you don't have to worry about watching the trade 24/7. If things go south, the stop loss takes you out of the trade automatically, helping you stick to your plan and avoid large unexpected losses. Another important strategy is to regularly review your performance. Just because you set out a solid plan and strategies doesn't mean you should put everything on autopilot. A crucial to track your trades and see what's working and make adjustments as needed. You might find that certain markets or strategies are delivering more consistent results than others. By keeping a close eye on your performance, you can tweak your approach and improve your consistency over time.
So it's high performing maintenance on your trading strategy, always looking for ways to optimize and improve.
Exactly, just like car need regular tune-ups, your trading plan does too. Continuous improvement is key to keeping your profits steady. Finally, and this is the big one, avoid emotional trading. Whether it's fear after a loss or overconfidence after a win, emotions can lead to poor decision making. If you stick to your strategy and avoid chasing losses or getting overly excited after a good day, you see much more consistent results.
So that's such an important point, staying calm and disciplined even when the market is going crazy, but it's easier said than done though, right?
It definitely takes practice, but staying level-headed is crucial for long-term success. If you can control your emotion and stick to your plan, you'll be far more likely to maintain consistency profits.
So next up, traders let's dive into another crucial aspect of effective trading, the risk consistency rules. This rule is key to maintaining both stability and long-term probability in your trading account. So Scholar, I know that we've got a great way of explaining it. So can you walk us through what the risk consistency rule is and why it's so important for traders to follow?
Sure thing, Ivan. The risk consistency rule is all about ensuring that you manage your risk in a disciplined, consistent manner. It limits the risk per trade to no more than 2% of your initial account balance. This is really important because it prevents loss swing in your equity and helps mitigate the risk of significant losses due to sudden market movements or unexpected events. So let's break it down a little more. Well, about the definition of the maximum risk per trade idea, it means you shouldn't risk no more than 2% of your initial balance on any single trade idea. This includes any floating losses, so you need to factor in all potential exposure. And the trade idea definition, multiple trades on the same asset in the same direction are considered a single trade idea. On the other hand, trades on a different assets or in opposite direction are treated as separate ideas. For example, if you open several positions on gold buy, they would count as one trade idea, but and the combined risk must remain under 2%. But if you have a gold buy and a GBP sell, they are treated as two separate ideas, each with their own 2% risk limit. Following these rules, work out your equity curves and encourages disciplined trading, and most importantly, reduce the chances of massive losses.
So thank you, Scarlett, for such a detailed explanation of the risk consistency rule. So next up, we are going to enter the promotions plan that we're currently running. So our vision is to foster a thriving communities of elite professional traders, positioning WeMasterTrade.com as a go-to platform for anybody serious about advancing with their career. So whether it's just getting started or a user experience under your belt, we are committed to offering you the opportunities and resources that help you succeed at every stage of your trading journey. So at WeMasterTrade, we understand that each trader's needs are different, and we're here to support you with tools, insights, and personalized packages that cater to your specific trading goals. And if you're ready to take your trading to the next level, you definitely want to stick around to hear of the exciting offers we've got lined up. The new promotion plan that we're unveiling today is specifically designed to help traders get more out of their experience at WeMasterTrade. So we can focus on creating more opportunities for growth, increased profitability, and long-term success, no matter where you are on your trading journey.
Okay, with that said, let's jump into our first promotions, which is exclusively available to our WeMasterTrade affiliate partner, the AP Zero Package. This package is designed to help you unlock greater potential with WeMasterTrade, offering unique benefits and features that can really boost your performance. The AP Zero package presents an incredible opportunity to specifically for our WeMasterTrade affiliate partner. Here are the key details. The package is named AP Zero. The cost just even $3 for under 510 and come with an account balance of the $30,000. To qualify for this package, customers need to complete the KYC process and sign up for our AP program, which helps create a secure and compliant trading experience for all participants. When it comes to the payment term, profit sharing allows you to earn up to 50% of your profit. For instance, if you generate a 10% profit amounting to $3,000, your potential share could be up to the $1,500. You can apply as many packages as you wish. However, only one can be active at a time. After closing an account, you're eligible for new packets. There are no limits on the number of payment you can receive, but keep in mind that account hitting the payment threshold cannot withdraw funds until certain customer referral conditions are satisfied. This packet is a fantastic way to kickstart your trading journey with a significant balance while minimizing your initial investment, making it perfect for those wanting to explore our platform with reduced financial risk.
So, alright traders who are looking for ways to keep more of your profit, well today we have an exciting update that will help you increase your earnings without changing your trading style. So it's about boosting your profit split by simply choosing the right funding package, and Scholar will break it all down for you.
Well, this new update is something that every trader should know about. When you put in the effort to grow your account, wouldn't it be amazing to actually keep more of what you earn? Well, now with this new profit sharing push, that's exactly what's happening.
Actually, scholars, I know that's one of the most common frustrations in trading if feeling like your hard work isn't rewarded enough. But now with the bonus profit sharing feature, you can actually increase the percentage of profits you keep. It's a total game changer.
So let's get straight into the details to hear how you can boost your profit split and learn more. So when you invest in an easy funding package, so with the package over $175, you get 1% bonus in profit sharing, and with packages over $350, you get more than 3% bonus profit sharing, and with packages over $500, you get 5% more in profit sharing. So now, Scarlett, can you help break this down, in a real example?
Well, of course, let's take a look at the $500 funding package. Normally, with instant funding, you start with a 50% profit share, meaning that for every $1,000 in profit you make, you'll get $500. But with this new promotion, when you choose a package over $500, your profit share jumps from 50% to 55%. That means instead of taking home $500 from that $1,000 profit, you keep $50,000. And while that might seem like a small change at first, think about how much that add up over time, especially for a consistent trader. So in short, the bigger the package, the bigger your profit share boost.
Exactly, Scarlett. And the trader, here's why did a shirt a smart move. Let's say you are someone who trades consistently and make $5,000 in profit over time. With a standard 50% profit share, you walk away with $2,500 with the 55% boost. You keep now you get the 2,750. That's an extra 250 in your pocket for simply choosing the right package. And the bad part, there are no extra effort required. You don't have to change your strategy or take unnecessary risk. All you need to do is select a higher funding package, and you will instantly start earning more from the same trades.
So now some of you might be wondering, why is it such a big deal for traders? So let's hear from Scarlett on this.
Great question, Aiden. As traders, our goal is always to maximize returns while minimizing risk. The best way to grow your account is to keep reinvesting your profits, but that's only possible if you're getting a bigger share of what you earn. With a higher profit share, you can scale up faster, compound your earnings, and have more capital to work with for your next trades. Think about it. If you're keeping a larger percentage of your profits, you have more flexibility to diversify your trades, try new strategies, and even withdraw more funds. This is especially important for those who want to trade more for the long term. Over time, these small percentage increase add up to thousands of extra dollars. So, if you're someone who takes trading seriously, this is a huge opportunity to level up your earnings.
That's an important point, Scarlett. And from a psychological perspective, knowing that you're earning more per trade can actually help you stay disciplined and focused. Instead of overtrading and taking unnecessary risks to hit bigger profit, you can trade smarter because you're really keeping a bigger share of what you make. Plus, this isn't just about individual benefits. The more trader can take advantage of this offer, the stronger our trading community becomes. More capital means better trading conditions, more opportunities, and a stronger ecosystem for everyone.
So, alright traders, you've heard it from expert. This bonus profit sharing offer you your chance to increase your earning without changing your trading style. So all you need to do is just choose the right funding package and you instantly boost your profit split. So visit WeMasterTrade.com now and grab your instant funding package.
And this is an opportunity I don't want to miss. The market is all about making smart decisions, and this is one of the easiest way to maximize your returns. If you're serious about your trading journey, this is a no-brainer. Don't wait too long because opportunities like this don't come every day.
So thank you, Scholar, for those valuable insights. It is clear that these promotions are tailored to provide maximum benefit. Whether you are a knowledge or a seasoned trader, at WeMasterTrade we are committed to supporting our traders at every stage of their journey. So remember everybody, these offers are currently available, but they won't last forever. So make sure you take advantage of them while you still can. And if you have any questions about these promotions or need support, just reach out, and our customer service team is always here to help. So we'll guide you through the process. And before we move on to the next section, I want to remind you everybody to engage with us in the comments. Let us know which promotions you are most excited about or have any questions about you might have about those our offerings. We are here to help and make sure you have all the information you need to make informed trading decisions. So next up we are going to enter the economic analysis of today's needs calendar.
So for today's calendar, with the first is German geo-economic sentiment. This index measures the confidence level of financial analysts regarding Germany's economic outlook for the next 6 months. A higher reading indicates improved sentiment, potentially boosting investment flows and strengthening the EUR. The analysis of the data, the ZIL index surged from 26 to 48.1, significantly exceeding expectations. This signals growing economic optimism in Germany. This increase may reflect positive developments in the Eurozone economy, such as improving industrial production, stabilizing inflation expectations, or optimism surrounding ECB policy. And for the market impact, the Euro and USD could rise as improved economic sentiment support the Euro. European stock may benefit, particularly financial and industrial sectors. If the ECB maintains a stable policy outlook, Europe could receive additional support. The next is the Canada's inflation data. At 7:38 p.m., Canada released several inflation-related indicators, while the CPI 0.6% was much higher than expected, which is 0.1%, indicating short-term inflation is accelerating. Median CPI and trimmed CPI remain elevated, confirming persistent inflationary pressure. Common CPI stayed at 2.2%, suggesting inflation is stabilizing at this level. Analysis of the data stronger than expected inflation may force the Bank of Canada (BOC) to delay interest rate cuts, keeping monetary policy tighter for longer. If inflation remains elevated, Canadian bond yields may rise, attracting foreign investment and supporting CAD strength. And for the market impact, USD or CAD may decline as higher inflation reduces the likelihood of POC rate cut. Canadian stock market could face pressure as higher inflation raises concerns about prolonged high interest rates. Crude oil prices may benefit as stronger inflation often aligns with robust commodity demand. And based on the analysis of both, possible trading setup includes the Euro and USD potential upside for long entry. If Euro or USD maintains key support level, consider buying opportunities. The target will around 1.095 to 1.1000. If push momentum continues, the risk if U.S. Economic data strengthen, USD may gain, limiting Euro upside. Well, for USD and CAD, period outlook for short entry. If CAD strengthen on inflation data, look for selling opportunity in USD and CAD. The target will around 1.3 and 1.34 if selling pressure persists. And for the risk, if oil prices drop sharply or US data surprises to the upside, CAD may weaken.
So
and that is the news.
Thank you, Scarlett, for such an in-depth analysis of today's academic calendar, and thank you all the audience for joining us today. So we hope the session has been informative, that you are as excited about the opportunities here at WeMasterTrade as we are. So remember to like, subscribe, and share the LiveStream with others who might benefit from it. And don't forget to follow us on our social media platforms to get more updates, promotion, and trading tips. Stay tuned for our upcoming events, and we're looking forward to seeing you again soon. Until next time, happy trading.
WeMasterTrade.